Hello traders, and welcome to another smart chart trading tutorial. In this video, we dive into the true mechanics of pullbacks, one of the most essential market behaviors every serious trader must understand. You'll discover why pullbacks occur, how they reveal the underlying strength of a trend, and what makes them a powerful tool for precision entries. Mastering this skill helps you avoid emotional trading, enhances your ability to read market structure, improves your timing, and gives you a more disciplined, professional approach to the charts. By the end, you'll understand how recognizing pullbacks can elevate your decision-making, reduce unnecessary risk, and position you with far more confidence in any market. If this is the kind of content you're interested in, please consider giving the video a thumbs up and subscribe if you're new to the channel. Let's get started. Welcome back, traders. Now let's get started. Now, what is a pullback? A pullback is a temporary move in the opposite direction of the main trend. It happens when the market pauses or takes a breather before continuing in its original direction. Pullbacks are very common because price never moves in a straight line, it moves in waves. Most pullback aren't random retracement. It's the market seeking liquidity to generate the necessary order flow and momentum to continue the dominant trend. In an uptrend, price is mostly moving upward. A pullback is when price drops slightly before continuing to rise. It's like the market taking a small step back before taking another big step forward. In a downtrend, price is mostly moving downward. A pullback is when price rises briefly before dropping again. It's a small bounce before the next move down. Think of it like this: uptrend, small dip, continues up. Downtrend, small bounce, continues down. Traders often see pullbacks as opportunities. Some traders utilize pullbacks to secure entries at more favorable prices, while others rely on them as confirmation that the prevailing trend remains intact and resilient. Pullbacks can also help avoid chasing price when it's already moved too far. Overall, a pullback is just a normal and healthy correction in price before the market continues in the same direction. In a valid pullback, begin by identifying the trend on a higher time frame and marking the key demand or supply zones. Wait for the price to pull back without breaking the demand zone, then observe for signs of reaction or hesitation at that level. Enter near the zone and place your stop just beyond the recent swing. For example, in an uptrend, if the price pulls back to a demand zone near the last higher low and shows a small bullish reaction, you can enter long with a stop just below that swing. If the pullback is invalid, the price may sweep through the zone or the recent swing, hitting your stop loss. How to identify a valid pullback? A pullback is a temporary move against the main trend before price continues in the same direction. To know if it's valid, not a reversal, look for these signs. 1. The trend must be clear. A pullback only becomes meaningful when there's a clearly established trend. In an uptrend, look for higher highs, HH, and higher lows, HL. In a downtrend, watch for lower lows, LL, and lower highs, LH. If the market is choppy or moving sideways, pullbacks lose their reliability, and trying to trade them can be risky. 2. Price corrects slowly, not aggressively. A valid pullback is usually calm, controlled, and not too strong. It should look like the market is taking a breather, not fighting the trend. What this looks like in an uptrend. The main trend candles, bullish candles, are strong and large, but during the pullback, the bearish candles are smaller, weaker, sometimes mixed, red, green, red. This shows sellers are not strong enough to reverse the trend, just enough to create a small correction. Why this matters? If the pullback becomes too strong, for example, large candles pushing hard against the trend, price moving back too quickly, a sharp, aggressive move opposite the trend, then it might not be a pullback anymore. It could be the start of a reversal. 3. Pullback often stops at key levels. A valid pullback usually doesn't move randomly. It tends to pause or bounce at important technical levels. These levels act as barriers that slow down the correction and help the trend continue. Technical levels, support and resistance zones. In an uptrend, price often pulls back into key technical levels, such as previous resistance that has now turned into support, a zone where buyers previously stepped in strongly. When price reaches this area, selling pressure tends to slow down, allowing buyers to regain control and push the trend higher. In a downtrend, price often pulls back into previous support that has now turned into resistance, a zone where sellers previously dominated. When price reaches this area, buying pressure weakens and sellers take back control, allowing the downtrend to continue. These zones help you know if the pullback is healthy or if price is preparing to reverse. Trend lines. A valid pullback often respects the trend line. Price dips toward the trend line, gently touches or slightly pierces it, and then continues moving in the direction of the prevailing trend lines. A valid pullback often respects the trend line. Price dips toward the trend line, gently touches or slightly pierces it, and then continues moving in the direction of the prevailing trend. This behavior indicates that the market structure remains intact, and the trend line is being respected as dynamic support or resistance, guiding the price along the trend. 4. Volume usually decreases during the pullback. One of the key characteristics of a valid pullback is a drop in trading volume. Volume helps confirm whether a move is a temporary pause or a potential trend reversal. How it works in an uptrend. During the uptrend, price rises with strong bullish volume. This shows buyers are actively pushing price higher. When a pullback occurs, volume often decreases significantly. Candles become smaller, trading activity slows. This indicates that sellers are weak and the market is simply taking a temporary breather, not trying to reverse the trend. Why this matters. Volume confirms strength or weakness. High volume during a pullback may indicate that the trend is losing control and a reversal could occur. Low volume pullbacks are safer for trend following trades because they suggest the trend is still healthy and likely to continue. Watching volume helps traders filter out false signals and avoid entering trades too early during potential reversals. 5. The pullback should respect market structure.